WTF? What's going on with the stock market? Because it feels like we're on a nonstop roller coaster. And I think people are starting to get a little bit upset, maybe frustrated, maybe even a little bit fearful. God forbid, extreme fear. So, what exactly is going on out there? Because this is not a fun market unless you're a trader. Things are getting really whippy, like I talked about on the roller coaster. SMCI initially going up by, I don't know, it was like 13%. And it's gone. It's now down by 11+% in after hours. This is adding fear to the news we heard from Nvidia yesterday on delaying their new chipset. So what does that mean? It means that we're still in the thick of earnings. We had Supermicro, Rivian, Airbnb win, and others. Some are winners, like we see here with Airbnb, up on the day by over 10% after reporting. And Airbnb is down by 16% in after hours. So boop, right? That one's getting a little knock on it today. So the net effect here in after hours, SMCI, I'm guessing it's the guidance, currently down by 11+%, and it is dragging down other chips. Please remember that yesterday we talked about how the first and last 4 hours look very different. Into the last 4 hours of yesterday, things look really flat. So I do want to come back and talk about this in a moment. Other news that crossed this morning was that we now have a vice presidential pick for Harris. And this was apparently decided when she woke up this morning. So it doesn't really seem like she's in a position of strength, at least for now, but she's in a dead heat with Donald Trump for the election. So we'll see where that goes from here. In terms of what we have for economic data this week, it's fairly light. But since tomorrow is Wednesday at 1 o'clock, we're going to get a 10-year auction. And that is likely something people will pay attention to this week, and the 30-year auction on Friday, because frankly, this market's been really whippy. So if you look here to the 10-year note, it's now solidly below 4%. It's actually cracking the head and shoulders pattern we looked at here. So I'll delete the W to show you that now we have our head and shoulders, knees and toes. We're starting to go down here. So the head and shoulder is playing out. If we look on the monthly chart, we've also stopped going up. That's important for me because it means that if we're going to start to see the Fed actually cut, which is what everyone's expecting, well, we would hope that yields would come down. All right, now let's look at some charts here for a few minutes. So let me just make sure I didn't miss anything. No. Got it. Good. There we go. Yeah, after hours. So here we go. That's what I want to focus on. Just needed the prompt. So if in the last 4 hours of trading, we're mostly red, but on the day we're green, what does that mean? It means a gap down, pump up, and they sold the close off. Why would people do that? Yeah, well, I'm wondering the same thing. I think I have an answer to it. Why? Because when I used to day trade, this is exactly what I would be doing. What do? Hey, the bigger the gap down, the more you want to buy it. But what do you do into the close? You sell. So if you buy the open and the market rallies by from low to high, it rallies by, how much is it here? We got roughly 2.5%. Yeah, you take that profit and you run. Notably, if you're investing for the long term and you've trimmed last week, this is an excellent place to buy. This is an excellent place to trim to realize profit. So there's less risk going on into overnight. But that's on a red day. What would happen on a green day? Gap up, come right back down to basically test the closing price from yesterday, rally all the way up to here, and then settle right below yesterday's close. What is that? That's a failed breakout. So let me delete all my lines and come back here because there's something really important that happened. We're battling for the gap versus Friday and the capture of yesterday's high. So what does this mean? It means that on the weekly chart, I've been talking extensively about the need for a gap fill here. What is it? It's filled. We can see it right here. We filled the gap. As soon as we filled the gap, we backed off. Why? Well, that's where I would expect to find sellers. And that's exactly what happened. So now what'll be important is that we have to see whether or not this head and shoulders plays out. If it does, hey, we got more downside ahead. We want to be mindful of that. Why? This is our last uptrend. It's our last stand. It's our last defense. And we can't really afford to be going much lower from here. If we look to QQQ or the Qs, pretty much the same thing. There's our low, there's our bounce, there's our bounce. What does that mean? We can't afford to print a weekly lower low, but the gap's now been filled. If we go to the daily chart, basically the same thing. Gap fill from last week, failed breakout here. So if you remember correctly, what I talked about yesterday was that I want to see the inside bar break. Well, let's go here to full candles just because it's a little bit easier to see. And let's even try this new one here, volume candles. Why? Oh, there we go. Bigger. Bigger means bigger volume. I'm going to ask you guys for a huge favor before we go further. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So if we now think about why these massive wicks would happen here, Part of it could be day trading. Part of it could be the bears attacking the gap fill on the weekly chart. Why? That's exactly what I would be doing. And also people who are longer term trying to just lock in a little bit of profit because they know that other people are going to be doing what I'm doing. So now there's a whole bunch of lines on this chart when I like to have clean, naked charts. So what do all these lines mean? It means that now we filled the gap. This was our high of the day from yesterday. We can get rid of that. Actually, first, let's look at a short-term time frame because what I found really interesting here was just what we were talking about on the stream this morning and into yesterday. So if we look at the push-pull that's been happening here, these lines are getting respected. Why? Well, have a look. Here's what we hit yesterday. That's what we were battling with today. This 51836. That's that daily low we were looking at, that relative low, the local low. So what really happened? Well, we established resistance into the close yesterday, come back down, basically 525 minus 1 point at 524. Then we get up to here, we power up to 526, come back down and retest 522. Then we advance to 530, and then we come right back down. So we could be forming some kind of M here where we go back down and test the lows. We are lower and after hours, but this market's moving fast. So this level seems important right here. And this level also seems important right here. Sorry, 51836. So where did those come from? Let's go back here. If we look, the white line goes all the way back here to May 24th, the last calendar day of May. And that level was respected. It's not really as important anymore because now we have the low of the day here, which will be easier to see. So now I'm actually going to also get rid of that candle. So we technically have an inside bar break bull, but we don't have a close over the previous candle high. It is hollow, which means there is an expansion. So what I would be looking for tomorrow is simply the same thing. I want to see the inside bar break. I don't think this is a decisive candle. It's basically given up half its gains here. It's puked half of it up. It's an inverted hammer because if you look at it, this is the downside. This is the handle on the hammer, and that's the metal part. So it's inverted. We don't like that. We like seeing hammers the other way like this, which signifies dip buying. This is rip selling. We don't like rip selling. So basically, we have to see where we close the weekly candle low because the same logic that we used here on the daily chart for SPY is now going to apply to the weekly chart, which I've been talking about this week. So to make it really simple, the only chart that matters for me right now is this one with the context that for this month, which is currently August, and it's currently August 6th, what does that mean? It means that we're currently below support. So we're going to be getting stop losses. We've now done number one. We have to wait all the way till number 4 or the end of September to get real confirmation or a pattern starting on the monthly chart. But I'm not going to wait till the end of September to make action now. So what I am going to do is just look at the weekly range. The bulls were able to gap down, pump up, and fill the gap. And they were able to move it from low to high by basically 30 points, 510 to 530. Whoa. But we're still in extreme fear, and we have to see where we're going to go. If next week we print a higher high, if it's a fail breakout, that's a fail breakout. And this will matter importantly because we're likely going to see that dominant head and shoulders pattern if we don't close back above this candle high next week. On the flip side, if we do lose the low, we stop going up. And we're going to be looking for a further breakdown, which means that, yeah, now we're looking for either, I already talked about 525. We already got to that number, looking for 500 and then 480. So that's it for today's video. It's basically the same thing for NVIDIA's chart, but what you can do is smash a thumbs up, or you can come hang out with me at 9:15 a.m. tomorrow. Thanks.